Thank you for tuning in. As always, I'm your host, George L. Mastery, and this is the Well Off Podcast, where today I interview Cherry Chan. For those that don't know, Cherry's an entrepreneur, an author, blogger, a mother, an accountant. She specializes in helping real estate investors reach their investment goals. And on this episode, we covered a couple different things. We started off by talking about joint ventures and joint venture statements. So we broke down what those were and why they are often recommended to people that are in a joint venture. We also talked about certain things that the two JV partners should be aware of when it comes down to tax time. So a couple tips and pointers there. And then we kind of moved on to holdcos and owning either a vehicle through your holdco for a holdco that owns real estate. And then also we talked about stock options trading. So buying under your personal name and also buying under a corporation. We cover a couple different things when it comes to options trading. So if you guys are into that type of thing, if you're interested in kind of getting into the nitty gritty of tax stuff, then this is a good episode for you. And if you appreciate it and enjoy it, then please do share it with friends and family. We're always here to hear your comments, and we would love to know what your thoughts are. If there's anyone you'd like to hear on the show next, please feel free to reach out to us. And as always, we appreciate you tuning in. We wish you all the best and enjoy the episode. Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. And for the second time, I have Cherry Chan with me. Most of you guys know her. She's an accountant, specializes with real estate investing stuff and stock options and all that good stuff for you guys. So Cherry, welcome back. I appreciate you doing this again.
Thank you so much for having me again, George. And it's an honor. It's a pleasure to be back.
Great. So I usually start off by asking about your childhood, but you've been here before, so you told us last time. I have like a list of questions that I prepared because I know you're very knowledgeable when it comes to joint ventures, stock option stuff. So I wanted to like kind of dive right in. I know I might be catching you off guard with some stuff, but if you could just tell us whatever, just give us your best shot for now, that'd be great.
For the record, I did not get any of these questions beforehand. If I don't get it all right, it's fine.
And just catching you off guard.
Yes.
But let's start off with joint venture statement.
Sure.
So I'm just kind of wondering, what's your take on it? Why is it required? And obviously, just to put things in context, we're talking about two parties that have bought real estate together. They have a co-venture agreement, and from my understanding, a joint venture statement is required as part of the accounting process. So can you kind of just break it down and explain to us what it is and why it's required?
Well, I guess it is not a requirement per se. It is always nice to have. Essentially, joint venture is a business on its own. If, say, you and I form like joint force together to buy a property, and let's just use some simple numbers. Like if we buy a property in Hamilton for like say $500,000, and we put in $100,000, and we rent it out for $4,000 a month. Like we want to see how this property is doing as a whole. And so the joint venture statement essentially is capturing how the business is doing, this standalone property is doing. I mean, joint venture actually extends toward owning multiple different type of businesses, not just related to real estate investment at all, but rather it is related to like all type of different businesses that multiple parties join force together to form. Mm-hmm. So the reason why we want to have it is really just to show, to single out the type of performance that this business is doing. And do you need it to file your taxes? The reality is once you compile the information and put it together in a financial statement format, single out that particular joint venture that we own together, what happened is that let's say I own 50%. So my corporation that owns that property on my personal name, if I own it in my personal name, I would pick up 50% of the income and expenses, assets and liability based on that particular joint venture statement. So that's the reason why you create a whole and look at the financial situation of that business as well. For tax purpose, we pick up the income and expenses, assets and liabilities based on our ownership structure.
Okay. So from what I'm hearing you say, it's not required to file your taxes. But do you recommend doing it, or is it kind of optional, up to you if you want that record or not?
It's not required to make it like a financial statement with the notice to reader on it.
Mm-hmm.
But you still have to pick up your income and expenses, your respective income and expenses, and put it on your tax return. You absolutely have to file taxes.
Yeah. Oh, yeah, for sure.
Yeah.
Okay. Yep. So that would help also kind of break things down for both parties. Like if you have a passive partner that just wants to see numbers, I guess this joint venture statement would help with all that, making it simpler.
Yeah, absolutely. And it helps to explain year over year changes and all that stuff.
Okay. And I know this is kind of a broad question, maybe a bit generic, but what should, from a tax perspective, what should joint ventures be aware of? Is there anything when it comes down to tax season, anything specifically that JV partners should be aware of?
It's the same thing for everyone. When you are forming a joint venture to do businesses, the income, that the money that you put into the joint venture account, whereas your also as well your partner, the amount of money that you each put into the business account have to be reconciled. That's number one. Okay. The number two thing is that one thing, the income and expenses, the cash coming in, and then also the cash going out are generally relatively simple. The only thing that may make a huge difference is the capital improvement that you've made to the property. The reality is that like sometimes you get a statement of income and expenses from maybe your joint venture partner's accountant, and they only capture one side of things. Because some of the repairs and maintenance that you do, they are considered capitalized item, and it has to be improved. It has to be capitalized as capital improvement being added to the cost of the building. And that part of it is often not captured on a statement of income and expenses. And so for you to reconcile the books, it's impossible. My experience with joint venture accounting reconciliation is that one is that the amount cannot be reconciled to the amounts that you put into the joint venture. Number two is that those capital improvement, they're typically not presented to the passive income partner side. It's harder to capture those. And the third thing is that the third item that could be an issue is that if your joint venture partner's year end is different from your year end, and when you do the adjustments, in terms of, like, for example, capitalize some of the roof that has been replaced. If you do decide to do it, and typically it's being done at the end of the year when whoever that's responsible for the books, but then sometimes the joint venture partners accountant file the tax returns have a different year end, July versus December. So then it may not have captured the right amount of information there. So those are the type of timing differences that you have to watch out for.
So would it be a good idea for both partners to connect their accountants to each other so that they're able to communicate about the year end and that type of thing? Or does it not make sense to do that?
Well, it would be awesome to connect the two to each other. The reality is a good accountant would be able to pick up things that are from the general ledger. So general ledger is the detailed transaction in every single account. So if you keep the bookkeeping record up to date, and the person that's responsible to keep track of that record should be able to provide the general ledger, the entire sets of books, to both accountants. It could be the bookkeeper, but it could be provided to both accountants, and then you would be able to see the documents, and the good accountant would be able to pick up the information that they need to file the taxes and use it as a support as well. And the reality is each of you should, as joint venture partner, each of you should really keep a copy of the records. Otherwise, like if CRA ever audits both of you, how do you justify the difference between the two, right?
Yeah, absolutely. Okay, so those are some good tips there. Just for things to look out for around tax season. Obviously, like, you have your own account, so you pick who you work with, but sometimes you don't really know who your partner might be working with, and their accountant may not be as knowledgeable when it comes to this stuff. So really good things to keep in mind. So I wanted to shift a little bit towards options trading. because I know you guys do a lot of that on your end. But actually, sorry, before we do that, I just have one more question. So if you do have a holdco that is holding real estate, like properties, are you able to purchase a vehicle under that holdco for and write off the vehicle?
That's $1 million question. Typically, if you have the holdco and only activities is to manage the holding company, owning the properties, owning the automobile vehicle directly inside a holdco would not make sense. The reason is because CRA likes to tax the individual shareholder for the corporation, for the availability of the car being used by the shareholder. So they essentially the corporation bought the car and the corporation is making it available for you to personally use it. And that doesn't make sense. And so CRA doesn't like that. And then they would calculate some taxable benefit being added to your personal tax return on essentially to tax you on the availability of the car being available for you to use. So
okay, got it. So it's not feasible to purchase a car under a holdco. It wouldn't necessarily be beneficial.
No, there are times that it could be beneficial, but for majority of residential real estate investors, it's hard to justify that the car is like 80%, 90% used for the purpose of running the residential real estate portfolio, right? I do have a client who owned the vehicle in his corporation and it's also a holdco, but it is an interesting holdco because the underlying property was a distressed property. And so he actually put in $2 million to restore it, and he's always traveling to the town to restore that property. And that's completely different, right? Because he always uses the vehicle to essentially to run the operation for that business. And now the property, it was purchased for $350,000. Now it's worth like 2 point something after he put in a couple of $1 million to fix it up. The reality is it really goes back to your particular situation.
Yeah. Well, then the question is, after that renovation's over, then what? The car is no longer used necessarily for that project.
In his situation, he has a better argument. He has multiple vehicles in his personal name. So that's also another argument that you would have, right? Like if you have vehicles in your personal name and you guys are using the two vehicles for your personal use, and the only time you would drive that truck is when you drive to the town to handle all the tenants' complaints and repairs and improvement that you have to do. That's two different stories.
Got it. Okay, that makes sense. And maybe along that line, can you do it in a prec? Can you own a vehicle in a prec?
A lot of real estate agents that I work with, they do quite a bit. They do drive quite a bit for their real estate agent business. And again, at the end of the day, the amount of standby charge that's being reported in your personal side or being calculated by CRA, it is truly based on the non-business use of the vehicle.
Got it. Okay, perfect. I appreciate you sharing that little bit of that little side question there before we go on to options trading. The question now becomes, are you able to, for those that don't know about options trading, like you guys do quite a bit of that. You teach a lot about how to do it, but obviously it has to do with trading stock options. So it's typically, from my understanding, taxed as a capital gain. So one of the questions that I had was, at some point, if you do enough stock options trading, could it be looked at as taxable income that as opposed to a capital gain?
So to step back a little bit, income means it's 100% taxable. When it is capital gain, it means it's only 50% of the profit that you make would be taxable. At any given point in time, you want to be able to argue the income that you are getting as capital gain because you pay essentially half of the tax. Or sometimes more than half of the tax, because depending on what your marginal tax rate is. Now, the reality is that it's not at the beginning, a lot of the investors fall under the category of reporting it as capital gain. But the reality is that so many people have evolved and have moved on to do a lot more complicated trading. And that includes like doing day trading, doing a lot of spreads. And so those incomes would be then considered income, not capital gain. So
Yeah.
it really goes back to your particular situation and your trading habit, how much time you spend in terms of trading, and how often you do those trades and what kind of strategies are doing. And a lot of the time, if there is no underlying stock attached to the trade, CRA could look at it as if it is an income transaction, not
Got
a
it.
capital, not on the account of capital.
Sure. So it depends on you, every individual person. How much trading are you doing? If you're like trading for 10 minutes a day and you have a full-time job and you're generating income in other ways, then it's probably a capital gain. But
Yes, and with a word of caution, in that 10 minutes, if you do like 20 trades and every single day you do the same way, if like some people do like 0 day trading, zero DT expiry day trading,
yeah,
and they only do it 3 days a week because they do it on the index, and they only because there's option expiring on 3 days a week, and they do it. They get in and they get out by lunchtime. They get in first thing in the morning, they get out by lunchtime. Those are still day trading, even though you spend only maybe 10 minutes a day. So I don't want to just generalize it. And it really also goes back to the strategy that you're using.
Okay. Understood. So it's never like a yes or no. It's case by case, always depends on what you're doing.
Yeah, exactly.
Okay, fair enough. Now, what about doing options trading under a corporation, under a holdco? Can you kind of explain what that looks like?
It's the same similar concept whether you have holdco trading, depending on what other things that your company is doing. If you have other businesses and you're using you're just trading, putting some transaction through the corporation, some of your trading activity through the corporation, it could still be classified as capital gain. Again, it goes back to the strategy that you're using. It goes back to how often you trade. It goes back to what other businesses are in that holding company. It might just have nothing in it. It might have you just set up the corporation just to trade. That's very different from a business that already has its operating business and generating cash flow, and those come into play. And if it's, let's say it is a company that already has a running ongoing operation and it's just using the excess cash flow to do the trading, then you could argue that it's a long-term investment, depending, again, going back to the strategy and also frequency of trade and all that. And if it is considered to be capital gain, then 50% of it would be taxable. The other 50% would not be taxable.
Sure. Now, what would be the benefit of trading in a holdco as opposed to in your personal name?
Same idea as if you are looking at corporation to own real estate investment, right? The number one thing is, hey, are you thinking of day trading? If you're doing day trading type of investment, then the reality is, if you report it all in your personal name, it could be substantial. But if you report it in a corporation, it could be as low as 12.2%. So it really depends. Now, the second part of it is where the money was originated from, right? Like if you have the property, let's say you have the property refinanced, and you pull out like $200,000 from the rental properties, and now you want to trade, and that property is only in the corporation. And if you take the $200,000 refinance money out, you would have to pay tax on it. Depending on how you take the money out, there's a chance that you have to pay personal tax on it. And if you don't want to pay personal tax on it, then you can leave the money in the corporation and to trade directly in the corporation. There's no another layer of personal tax. So those factors come into play. It's not just it's better to trade in a corporation. There are other factors as well.
Okay, understood. And then, so if somebody wants to kind of understand what would be better for them, would it just make sense to consult with you and then you would kind of give them some advice, whether they should trade in their personal names or in the corp?
Yeah, absolutely. They can consult with my team, and then my team will sit down and look at the big picture. And there are opportunities for income splitting as well. If you have a low income spouse, doesn't necessarily need to do it with by their corporation, but there are ways that we can work with our clients to map it out.
Right. Awesome. Okay. So those are really the things that I wanted to discuss, because I know last time you were on the podcast, we touched on a couple different topics. But is there anything that comes to mind that you would want to share or discuss before we would move on to the next section?
Well, there's the next section.
Yeah, the next, it's a short section, which you did last time too.
Oh, okay. So I'm just going to shamelessly self-promote. If you guys want to find out more about tax information, you can always go to realestatetextips.ca, and that's going to give you some free guides to download. And I haven't ventured out to really write any free tax tips on stock option trading yet, but all the information are there related to real estate investment. I recently also started a YouTube channel. It's Real Estate Tax Tips. If you go to youtube.com/real estate tax tips, mine will show up. And that essentially provide a lot of tax tips, a lot more diversified tax tips, including like stock option trading, including the use of TFSA and RSP and all that other information.
Yeah. I've seen some of your videos. You guys have a nice, nice production going. You got the high quality cameras, everything going. So that's awesome that you started doing that. I was going to jump to the random 5. So I'm going to ask you 5 questions and you just tell me the first thing that comes to mind. So the first one is, what is one thing people would never guess about you?
That I'm an introvert.
Okay. Yeah, I guess I wouldn't have thought that either. And number 2, what's the strangest thing you ever did in high school?
I mean, I have like 3 different high school that I went to. I went to school in Hong Kong. I went to school here. I guess the strangest thing is that I went to the worst high school in North York.
Okay.
Worst high school.
Yeah.
I don't think it's necessarily strange, but it's rather crazy. But our intention was to get into the best high school, but because we didn't know that we were living south of Finch instead of north of Finch, north of Finch will get us to the nicest high school, and then south of Finch will get us to the worst high school where the gun shooting happened.
Okay, that's a good story. Number 3, what technology are you most hooked on?
I think it's technology in general. Anything that can improve my productivity, make my life easier, anything. Doesn't have to be a particular app, not necessarily Instagram or anything. It's just, I'm always about making our lives easy.
Yeah, for sure. I know that was, so last time you were on the podcast, we were talking about a lot of the apps that you use, like Pluto and some of the other stuff. Yeah. Number 4, who's the most interesting person you know?
The most interesting person that I know would have to be someone that does everything as well.
Yeah.
But I'm trying to be one of those interesting person, but it's hard.
Yeah.
So I got really inspired by my partner's sister who now ski Black Diamond at Whistler, and she does photography, and she's also a very accomplished medical doctor herself.
Cool.
So she actually spent all the money getting herself private lesson, while her kids are also getting some group lessons, like for example, learning how to ski. So I'm trying to do something similar to that. Essentially, I'm taking up skating lessons to learn how to ski. I'm trying to take skiing lessons, learning how to ski. And it's just, we're paying so much for the kids and we're there anyway. Why not learn a different skill?
Yeah. Just expand your brain, get smarter and better. Yeah.
Yeah.
Cool. And the last question is, what's the most fascinating fact you know?
I don't think it's fascinating. It's so sad that we only have limited time in life, that we have only so much time left in our lives.
Yeah.
And that we really have to live our life to the fullest. And we have to be intentional to live it to the fullest.
Absolutely. Yeah, that's great. So there we go. Do you want to tell people how they can reach you and what services you provide?
Okay, that's a great question. I kind of like shamelessly already promote myself, but you can always go back to realestatetaxtips.ca and then I would be there.
Okay, awesome. So that's your contact. Obviously, the services you provide are accounting services. And like we mentioned, you guys do a lot of like options trading courses, that type of thing. So if you guys are interested in learning more about that, check out Real Estate Tax Tips. Cherry, as always, I appreciate you and all of the knowledge and everything you share. Thank you for your time.
Thank you.
As always, thank you for listening. I hope you enjoyed the content. And if you did, I ask you to share this with a friend, with a family member, somebody who might benefit. And it's always appreciated if you can leave us a review, especially if you're listening to it on the Apple Podcasts app, or if you're on YouTube, give us a like, subscribe, comment, and your support is always appreciated. Thank you very much.